What is going on? Welcome to Stock Talk with Nico Criticos. Today we're going to be doing some updates with the stock market. I'm going to be talking about what I'm doing with my stocks because this past Friday we had a big drop in the market. The SPY is down 2.5% and the triple Qs is down 3.5%. I mean, a couple weeks ago I started selling a lot of my stocks. A good chunk of my position in the triple Q. The triple Qs is my biggest position by far, just because I feel like that's one of the best investments you can make. And so as the thing, I think around right around $600 a share is when I started taking profits and I started selling, quite a bit of shares. Um, just because, for a couple different things. I think the main thing is really just valuations of stocks, and to me, that's one of the most important things. It's not the only thing, there is macroeconomic factors. I think that interest rates, have an effect on the stock market. The tariffs have an effect. There's all these different things. But for me, I think valuation is one of the most important things because the valuation is the price you're paying. And when you're buying something or investing in something, economics, a big part of it is how much are you paying? I mean, the price of something is pretty important. So that's kind of what I base a lot of my strategy off of. So stocks, like, all you got to do is let's see if SPY has it. Yeah. So you come down here, top 10 holdings. You look at these stocks: Nvidia, Microsoft, Apple, Amazon, Broadcom, Meta, Google, Tesla. There's a lot of these stocks are either incredibly overvalued, such as Tesla, and there's stuff like Apple and Microsoft where it's just like they're trading, higher than they normally do over the last, 5 to 7 years. And so I'm thinking to myself, okay, there's not really a good opportunity here, to buy into stocks and to make money, right? Like sure, maybe Meta or Amazon. Amazon wasn't really an overvalued one, but let's say one of these companies, even a Google, something like that. Sure, maybe it keeps pushing a little bit. If earnings are good and if the market sentiment is good, sure, maybe it keeps pushing, right? And the P/E ratio keeps going higher. But why would you want to bet your money on that? I don't. So when I see valuations get to that certain point, I'm thinking, okay, this is a time to start taking profits because the chances are, there's probably a 70-80% chance now that it's only a matter of time before these stocks come back down, right? Or we're going to have a little correction or something, get these stocks back down to a reasonable valuation, and then bam, then it makes sense to buy, and then the odds are in your favor that the market's going to keep going up. So look at this, for example. Okay, here is Yardeni Research. Here's the last 25 years of forward PE ratios for the Magnificent Seven as well as for S&P stocks. Okay, so obviously Magnificent Seven is pretty high right now. Okay, I mean, in 2024 it was high, and then in 2021 was when we were like pretty much in a bubble, which I'm going to talk about our bubble situation right now too. But the Magnificent Seven is they're high, and I mean, sure, maybe it could go on for a couple more months, right? I mean, you look at this line. There's always a chance that it does last a year or something, right? But I just, as things go up, I wouldn't want to bet that. And then you look at the red line. The red line is S&P 500 large caps. This one is just this one is just clear to me that okay, it's trading at the same valuations. We're at the same spot that we were at in 2021 when everything was pretty much in a bubble, and then the following year we had a major crash and the market was down 26%. Bunch of stocks got hammered, right? This is telling us that that's exactly where the stocks are at today. So why would you want? I mean, I definitely wouldn't be buying them, but even holding them, I don't really feel safe. There's certain stocks, like I sold AMD this year at 170, 180 bucks. And sure, I missed out on some money because now it's it hit $230 or something the other day. So there's certain stocks like that where they will go up. Some good news will come out about either someone raised their price target or they're doing a merger or something, and then yeah, maybe it goes up another 20%. But the majority of stocks, that does not happen. The majority of stocks, they just keep inching along and they keep pushing that valuation higher and higher. So to me, I took a lot of profits. Um, and normally what happens is normally when I have these sort of predictions about things are becoming overvalued, it's time to take profits. Normally, I am a couple months early. Normally, the market keeps riding higher for like 3 months or something, and then bam, then the crash comes. So that's kind of what I was expecting this time because to me, when I see things like this with evaluations, I normally spot it and I'm like, okay, it's time to it's kind of dangerous to be buying or holding right now. But I mean, who knows? If this past Friday was the first day of our correction, then maybe this lasts for another 2 weeks or something. I don't think we're going to have another 26% crash in the Nasdaq. I think we it would be I think it would be under 20%. I think like 15% or something is more realistic. But certain stocks like a Tesla or something, or ones that are trading at higher valuations, those I could see coming down, you know, over 20% because that's just Tesla, like stocks like Tesla or Palantir, they're kind of ridiculously overvalued. So that's how I see that. As far as the bubble right now, the thing with the whole, the AI situation right now, the stocks that are going up because of AI, it's very much similar to the dot-com bubble era. And so it is, I don't think it's necessary. We're not as bad as it was back then, but it's kind of the same idea. And you have Nvidia, AMD, OpenAI, Microsoft, Intel. You have the chip players, you have the tech companies, and when they're all kind of turning into each other's customers while taking ownership in each other's companies, that's kind of like a bubble. And it's just not a good sign because once one bad thing happens in that loop, then it destroys the entire ecosystem, right? The whole thing falls apart. So that's kind of the way I see that. And there's sort of like ASML. This is a stock I own. I'm super bullish on this. This one took a while to pay off. This one I held. You can see that for the majority of the last year, it was flat, and then the last couple months, it started going up. And I think I bought this in the 700s, and then the other day it was over 1,000, and now it's coming down a little bit. But the point is that I think that in a year from now, I think the market's going to be solid. I think we're going to be in a bull run in about a year from now. But over the next 6 months or so, I think we are definitely due for a correction. Like I said, about 15% in the triple Qs, and then with certain stocks like Tesla and Palantir should be going down like 25% plus. And then there's other stocks like I think ones I like are like Salesforce, right? Because this company's net income has dramatically increased the last couple of years, going from like a couple hundred million, like $200 million or something, to now over $6.5 billion in income. That's crazy. So why is this stock basically flat and trading at the same price it was 5 years ago? It doesn't make any sense. So that's why this one I am happy to be a buyer of. And of course, if the market does go down, stock like this would be brought down with it, but it's not going to be as bad. For example, so this it was only down 1.5% this past Friday, even though the S&P went down more than that, right? The triple Qs went down double that. You look at a lot of other companies, you look at the ones that are more susceptible to some of these things. AMD was down over 7%. Lululemon, another one of my positions, that one was down what over 4 or 5%, right? So that's kind of the way I see this. I just think again, in a year from now, I'm very bullish. I think we'll be in a very good spot. But I think over the next 6 months, I think we are due for a correction, and I would not want to be buying stocks right now. I mean, you see if you look at the gold chart, gold is up 50% in the last year, which is just insane because normally gold does not do that. Gold sometimes is flat for several years. So there's people hedging with that, which makes sense. As far, so I was talking to my friend today about this. I don't think I would buy gold now necessarily because I think a lot of the bullishness for that it's kind of ran its course, I would think. I don't When you look at the chart, it's kind of ridiculous how much it went up in the last year compared to the last 10 years. But there's stuff like gold and Bitcoin where it's a good hedge in times like this when the market's rough. But overall, I'm generally a stock market person, so I'm always, playing the game of when do valuations go down? That's when I'm going to buy in. When valuations get ridiculous, like they're kind of at right now, that's when I'm going to be taking profits. And that's why I've taken some profits. Um, so that's really it. That's why right now I have about what, 30 something thousand dollars in cash sitting around. And that's a pretty good spot for me. Base if the market falls 10 to 15%, I'm pretty happy with just having my, 30 something grand, putting that back into stocks. And then again, for 2026, I'm pretty bullish. So I think that's going to be a good year, and that's pretty much it. So let me know what you guys think down below, and I will see you in the next video. For this month, I'm also going to try to put out a video for 5 stocks I'm buying this month. But yeah, let me know your guys' thoughts, and I will catch you later.